the easiest, laziest shot on goal first, let the tokens rip. Maybe a handful of people get lucky. Congrats. But, cohorts 2, 3, 4, 5 onwards, you're much more sophisticated, and you need to be, because your competition is, the market expectations are, and frankly, the demand side of thing is, they're much more educated and in tune with what it is that they need, versus going with someone who is kind of like, we're just doing a bunch of everything, and by the way, we have a token. That's not how the world works.
What's up, everyone? Welcome back to Fully Diluted. Excited for this one. First time on one of these. Get to talk to a good friend of mine, Brandon Potts. We talked back in April, and we talked a lot about at Solana Crossroads. And so we have Dylan here now too from the enterprise team. And we're going to talk about some DePIN, venture, AI, maybe some robotics, and really get into the thick of it and seeing what Brandon over at Framework is talking about. So I'll let you guys introduce yourself quickly, but we'll kick over to you, Brandon.
Yeah, well, hey, thanks for having me, Jen. It's a pleasure to be here. And what can I say? Briefly on myself, a partner here at Framework, have been on the squad for about 4.5 years now. I have a background in mostly engineering and in product. So started out as a structural engineer, believe it or not, but was fortunate to get involved with Ethereum in the beginning. Joined the founding team at a startup called On-Chain AI, doing a whole bunch of basically on-chain analytics and frankly a lot of sleuthing, if you will, but countering ransomware and working with a bunch of government agencies and cyber providers in the good fight there. Then went on to a chief of staff role at a biotech incubator, a fancy title for basically running operations and just getting into the trenches with our incubes. Had a couple of home runs there, and then was very fortunate to join Framework here in our first fund and lead, a bunch of different efforts and contribute to a number of others that are ongoing. But yeah, on the Framework side of the equation, look, we like to be lead investors, predominantly in seed and in Series A rounds. We like to take larger concentrated bets, really roll up our sleeves and do whatever we can to help our founders, frankly, win. And so, yeah, happy to get into it, from there, but that's us in a nutshell.
Thank you. And yeah, thanks for coming on. Just want to start off very high level. Could you go a bit more into Framework's general outlook on the current venture market? Just what is the state of crypto venture, in August 2025?
Yeah, I mean, look, I find it really refreshing to be in crypto venture right now. And I know that it may not seem as exciting as times past, or maybe some of the crypto natives are kind of thinking that, this is the top, or we've done everything, or we've tried everything, or, there's always the conversation of we need more apps and we don't need more infrastructure. Long and short of it is, basically 99% of what you read on crypto Twitter is wrong. What I view as the most exciting part about crypto today is, frankly, a founder can come in and take on just about anything. Obviously, there's a lot of nuance there, and I don't want to overgeneralize and suggest that crypto is ready for breakout in, every category, every classification, or every business model. But really, we are at a point such that, you can come in and have a rather lightweight touch point with a blockchain or an on-chain component or a financial primitive or a service, and frankly go on and take on something, in any sort of category. I struggle sometimes with all the nomenclature that we, wrap all of this stuff in. And so I don't like to engage a whole lot in trying to classify, sort of what category it's in. But suffice it to say, we're meeting with all sorts of founders now who, one, are reinvigorated or invigorated for the first time to come in and engage with crypto or build something crypto specific or crypto adjacent. A large part of that is due to, frankly, just the social shift in terms of, all the legislation and all the things that are happening here in the US as it relates to going from kind of a negative environment to one that's certainly positive now. And so the social shift has been monumental, and all sorts of new founders are coming in and brainstorming, throwing spaghetti at the wall, actually engaging, actually building. There's a wide spectrum there, but suffice it to say, the talent pool is growing. And so for me, that's always the lead indicator as to what makes this exciting. And frankly, just the amount of context shifting that myself and my teammates are doing on day-to-day pitches, that's always another lead indicator as to, what is the kind of net new market, or how wide is the design space here. And, I can tell you guys with confidence, it's wide, it's large, it's growing. And yeah, I mean, I'm sure we'll dig into like more particulars, but that's the state of crypto venture right now, is like, who's someone who's serious, who has a distinct read on something that's undoubtedly large, and frankly, who has the right sort of timing and skill set to put together a killer team and sort of get the right partners around them to go out and execute and get distribution and get revenue in the door.
Yeah, I'd love to talk a bit more about the extended design space. I know we've heard from a few VCs that they've made fewer investments this year and are just seeing less overall opportunity at an early stage in crypto than prior years. It sounds like Framework sees things differently. What do you think other VCs might be missing in terms of just what can be done with crypto?
Well, let's be candid. I mean, the definition of crypto VC is quite wide, and there are all sorts of funds and folks playing different games. For starters, I would probably wipe out a large part of the field as sort of people playing old games, if you will, in terms of pushing founders to push out a token, get a centralized exchange listing, grow their community, yada yada. We all know how that works, or at least anyone paying attention or in this for the long haul knows how that sort of is performing right now. And so, look, I mean, just generally the whole landscape shifted such that you really just need to be indexing to founders now. It's a little bit less, I think, about a flashy white paper and getting a bunch of followers and hype and pure narrative. Make no mistake about it, the marketing machine and sort of zeitgeist and things that, describe a new market or describe a new problem well generally do well in any technology. That's not something that's unique to crypto. But, then layering in sort of like pre-launch token, airdrop, centralized exchange listing, like all of that stuff, I think it kind of kills the baby in the cradle. And so we're just generally, at a point now where I think ourselves and anyone who's serious about crypto and venture and long-term returns to our LPs, our clients, we're just looking for folks who, like I said, what is the market you're going after and what's the demand case? We all know that crypto is very, proficient at bootstrapping supply, followers, users, attention generally. But the attention more often than not for the games that have been played previously was shorter term in nature. That's not the game to be played anymore. What is it that you're really building? And where does demand come from? And what does that look like? How do we size that? What's the step function upwards in terms of order of magnitude on size? And who are the target, customers? How do you get into the nuance that's around, local regulations? Or maybe it's, nation state sort of compliance like standards. So yeah, I mean, I'll pause there, but happy to get into any specifics.
Yeah, so I think we can definitely agree. It seems like the game is changing. One trend a lot of people are talking about is a lot less investment activities happening with large infrastructure projects, like we saw in the last, I don't know, probably since 2020 or so. Do you think there's more of a shift towards applications within venture in crypto or just within Framework's portfolio itself?
Yeah, once again, Dylan, I hear what you're saying. I somewhat disagree with kind of all the nomenclature and framing that we put around these things. Maybe to cut straight to the chase, I think that we're at a stage now where I'm less interested, or the market's generally less interested in general infrastructure or something that's generalized. More often than not, what's more entertaining, or I guess what's more enticing or compelling, or what makes more sense is application specific infrastructure. And more often than not, we're looking for who has the tightest feedback loop between, let's just say that there is this key distinction and it's black and white between infrastructure and application. And it's a 0 and a 1, and it's that simple. Well, in that world, how quickly is the 0 and 1 interfacing with one another and forming this symbiotic flywheel? And look, I mean, you look at some of the breakout use cases for kind of what I call application specific infrastructure this year. I would point to things like Hyperliquid, where, they are kind of their own L1, but is it a general one? I mean, I know they're doing things with Hyper EVM and they're moving in that direction, but that's not where they began. Rather, they began with more application specific, which was all dedicated towards perps and the performance and all the components that go into making that as seamless as possible and on parity with that of a centralized exchange or legacy, exchange. Another great example, for example, is Plasma, right? Plasma is another L1 for sure. But again, it's application specific and it's very close to the metal on how is it that stablecoins, in particular USDT, operate. What are, all of the low level sort of bytecode mechanics as to how this thing moves, functions, and how do you get that to a point? I mean, 50% of block fees generally on ETH, and I think it's even more so on Tron. I haven't pulled the latest numbers on that in a while, but suffice it to say, a large part of the main chain revenue fees on some of these L1s come from stablecoin swaps, transfers, etc. Well, your revenue is my opportunity as a new quote unquote L1 or application infrastructure coming to market. And that's exactly what, Plasma is. So those are some of the, I think, sharpest examples to point towards. But make no mistake, there are all sorts of entrepreneurs and founders looking at that and frankly, looking at maybe less crypto native, quote unquote, use cases, and really just looking at how do we extend DeFi to date or some of the financial services or primitives that we've established to date and kind of stress tested or A/B tested by way of using crypto native capital and basically extending out kind of a private credit layer or a financial layer or, borrow lend or what have you, basically just a better, financial services layer writ large as it relates to perhaps its cost of capital, perhaps its, timeliness or settlement, or perhaps it's frankly just frictional losses as it relates to using legacy, maybe payment rails or baking rails. So yeah, I don't like to engage a whole lot in kind of like, I know this year it was hot to talk about apps versus infrastructure and yada yada. I mean, I get it, but look, it's much more nuanced than that. And frankly, we're light years ahead of kind of that conversation as it relates to founders that are thinking very specifically as to what it is that they want to do with their life and a company that they can build to kind of fulfill a need or kind of this, burning desire to go out and start something own and get it to a massive venture-like outcome.
I think before we deep dive into some of these sectors, I know you don't like really like labeling sectors and everything. Before that, I think something that was interesting from the Crossroads talk we had was the like emergence of AI, vibe coding, and like coming and like early seed projects later along in their journey. Is that true? We've seen a lot of projects come out that have just been vibe coded over the weekend, caught storm, token runs, whatever. But are you seeing that with like legitimate projects that you guys are seriously going to invest in, whether or not you do? But are those is that actually happening? Are these projects further along in their journey at an earlier stage when you go to see them early seed or Series A or wherever you're interacting with these projects, or is vibe coding still kind of a meme and kind of a weekend hobby project still?
Yeah, look, I mean, we're not really in the business of investing in vibe coded startups. I mean, I think it is sort of, and many people have talked about this, but I do view it generally as a productivity tool or just an absolute, kind of on steroids brainstorming sort of partner or A/B tester, or like, look, like I want 8 or 9 different instances of how I would implement this or instantiate this or stand this up on this sort of, architecture versus this one or in this database or what have you. So yeah, look, make no mistake about it. We chat with kind of individual contributors and the engineers on these teams and understand sort of what that means as it relates to maybe team size or capital needed. But I think to answer your question more, specifically, yeah, I mean, look, like we're investing in serious companies and founders, and I would expect you to come to the table with a notable amount of, pipeline with real customers, with line of sight to meaningful revenue. And not only like that, but just a whole ton of diligence and work and preparation as it relates to what it is that you're doing, and having multiple sort of paths in mind or contingency plans, fallback plans. Here's like plan A, here's A prime, here's B prime, here's C plus, etc. Like basically we're just looking for folks who are much deeper into the weeds than we are. Ideally, they're the deepest or amongst the deepest in the weeds, in the world on said topic. And how kind of vibe coding fits into that is like anyone's sort of guess. But yeah, look, I mean, I think also it's just generally compressed time to market. And so the expectations are generally higher as it relates to what are sort of the milestones or deliverables when you hit the table for, say, a Series A and you're looking for a lead investor. The expectations are higher now because, your competitors or others out there can go out and spin up an MVP in a weekend. Whether or not it's a meaningful one that totally works or it falls over when it's stressed or customers are live and it's in prod, that stuff's kind of all over the place depending on what the product is or the tech is and sort of how sophisticated it may be or how intensive it may be as it relates to those parameters. So yeah, it kind of depends, but look, if you hit the table chatting with us, we're just looking for preparation, a firm sort of thesis and opinion on the world, and a clear plan of action as it relates to how do you get killers around you and those who are frankly going to help you win, and how can we help you in doing so as well.
Awesome. So I guess turning towards terms for a bit, you mentioned you invested in Plasma. I think Framework led the round, actually. Seen a lot of
Yes.
uptick in interest in stablecoins and tokenization. There's a lot of debate over, do we need stablecoin specific chains, and why do we need something like Plasma specifically? Could you walk us through how you guys are viewing Plasma and the stablecoin space in general at Framework?
Yeah. So we led Plasma's round late last year. And I think, this was generally before all of kind of the hype as of late around stablecoins and, of course, the Genius Act being signed into law. But make no mistake about it, it's funny. I have found that stablecoins have kind of captured or sucked the oxygen out of the room as it relates to themes that we've talked about in crypto for many years. Maybe it's inclusive of RWAs, tokenization, you name it. And kind of even now the term of stablecoin has multiple kind of permutations or meanings depending on who it is that you're speaking to. Obviously, Genius has a more specific interpretation. But look, I think what's happened generally as of late is, I kind of alluded to it earlier, it is widely accepted and common knowledge now that stablecoins are positive for the United States. They extend the utility and distribution of US dollar. It's undeniable. And not only that, but they are one of the staunchest purchasers in sort of a resilient, distributed manner of US debt. So, who would have thought US, number one export debt? Who's one of the top buyers? These things called US dollars on blockchains, aka stablecoins. And so, look, I'm probably not noting anything new here to your audience, but I think if you sit with that for a moment and imagine that message percolating and becoming accepted, that's a very powerful moment in crypto. And it's hard to, frankly, sit back here and wave a hand at that and just go, cool, when's the next catalyst or cool thing? It's like, no, it's already happening. It takes time for sort of the legacy world to steer the ship in that direction. But that's why post Genius now, every single bank, payment provider, credit cards, you name it, fintech, what are they all doing? There's really only two elements I see mentioned in any sort of earnings call. Or if you're a late stage, private company, you're looking for the same thing, or you can get lead indicators as to who it is that they're hiring on their teams. It's twofold. It's AI and it's generally stablecoins. And it kind of depends on sort of your business model and, I guess the architecture or your target customers and the user flows. But I think broadly, people are looking at stablecoins in two sort of buckets. One of which I think is, obviously awesome, but I think a little bit less compelling is more from a cost savings perspective. Make no mistake, if you're a payments provider, you're living on razor thin margins and it's all about massive volumes. Or maybe it's net interest margin, in terms of assets under management or assets minted. But needless to say, you're basically living on razor's edge. And so if you can use something to increase sort of those margins or compress costs, yeah, you're in. You're fascinated, you're exploring. And with Genius now, you can do so in a compliant way. So there's no fear from shareholders, there's no career risk, there's no risk of you sounding like a nut job on your next earning call or, at the board meeting. But I think really more often than not, as it relates to new technologies and human adoption cycles, the message that more clearly lands is not one of, hey, I can save you money with this. It's always, here, I can help you make more money with this. That message is infinitely more powerful and more potent. And I think that's what is so exciting right now about stablecoins is people are generally looking at this in the same way they're looking at AI, where this is a race for distribution. If all of a sudden you can have sort of global coverage or, all of the state coverage, for example, in kind of one click or widget or implementation, how you present that to the user, totally up to you. You can leverage stablecoins totally on the back end as something as an FX tool or a transmission tool, or you can explicitly put it up front and use it kind of as the honey to catch bees, if you will, as it relates to, hey, we're going to actually service some pass back yield here and compete, frankly, as more of a customer acquisition element. And so, it totally depends on kind of the business, but like I said, the masses or the institutions or the enterprises are all around the table, and they're, earnestly working to understand, hey, look, who do we sort of work with? We get the message, we get the theme, we understand the value prop. Now they're working into, do we build internally? Do we acquire externally? Where can we sort of park assets for now? What's sort of the next legislation to come through? That'll be market structure. Do we want to move now, or do we wait for market structure? Do we dip our toe in and then go big after? Like, I guess what I'm hinting at is we're past the point of like education and what is this and how does it work. We're in implementation details, and the devil's always lie in the details. But nonetheless, that's where we're at, and that's the level of depth to which these conversations are sort of taking on. And similarly with like the regulators as well. Like, these are sharp folks, and they're working in earnest, because look, the prize at the end of the tunnel, so to say, is massive. I mean, there are very large incentives and possibilities and potentials here, and everyone's keenly aware of those. And that's just the crypto component. The AI sort of stuff is kind of another one, but I think the two are increasingly going hand in hand.
Yeah, I like your framing of placing AI next to stablecoins. I also feel like we're seeing similar debates of, is it going to be the large incumbents who can capture the majority of value of AI and stablecoins as well, or is there a significant opportunity for startups as well, stablecoin space, to create value? It's not just all going to accrue to the already established large players in fintech and TradFi and everywhere else in the economy. How do you think about this?
Yeah, I think maybe to continue pulling on the thread I was indicating earlier in terms of infrastructure relative to like an application, if you will. I think it's tough to maybe roll out just like, hey, look, we're just going to start a new stable coin. It's just general. It's kind of a similar business model as, maybe a Tether or a Circle. I think to do that is difficult unless you really have sort of a kick-ass consortium or really some unfair advantage around the table as it relates to distribution or adoption. Obviously, you're seeing teams kind of do, roll-ups or M&A strategies around that and look to sort of do that. I think, really in order to kind of break through now and establish some just momentum on your side, you really need to tackle a particular vertical or use a stablecoin for a particular use case that's very large and it's very massive. And you need to win that and establish that as your beachhead before going into verticals 2, 3, or 4, or parlaying in parallel, maybe some horizontal infrastructure or white labeling, or kind of shifting from maybe B2C to B2B, or maybe it's vice versa. And so all that to say, as it relates to kind of rolling your own stablecoin now, it's more or less like, how do you structure it? Or what is it? How do you brand it? What's the use case for it? We have a few sort of shots on goal and portfolio companies working on this now. I'm not sure I can comment on, I don't think one's public yet, so I'll hold my tongue. But suffice it to say, people are looking at this and they're working hard, and we see a lot of potential. It's unclear to me that you kind of view these as like, yeah, we're going to underwrite this as Circle and it's a net interest margin business, or it's Tether and it's a bit more of something that frankly just you don't need to pass back any of the yield because it's ex-US and the value prop is something else entirely. So there are, a number of considerations that go into this. There's obviously geography, there's kind of user preference, there's the business model itself, and then there's frankly just speed to market and what is it that you're getting distribution for or adoption for. So yeah, I mean, wide open design space, and we're excited to see all sorts of folks kind of putting up shots on goal. Like I said earlier, the definition of a stablecoin, though, however, is I think somewhat in flux as it relates to us in crypto view, maybe some of these yield bearing instruments as quasi stablecoins. In a post Genius world, we're obviously going to be calling them something else. But, 6 months ago, we were all calling these stablecoins. But look, I mean, we're generally at a point now where writ large, crypto has proven product market fit in stablecoins and financial services. And now we're generally moving up the stack into more bespoke markets and looking to do maybe a bit more of what's called a structured product or a private credit placement, or frankly, just something that's a bit more in tune with TradFi has done for decades past. And so I'm sure we'll find unique nomenclature around it. We always do. But look, I think what it boils down to is just cost of capital. Nothing speaks louder than cost of capital and frankly leverage and distribution. And I don't think there's a single asset on the planet that is better at that than stablecoins, which I think is in, there's already over $280 billion on chain in stables, and we're just getting started. I mean, it was just made legal, essentially. So, the Treasury, Scott Bessent, a number of folks are putting out prognostications for 2, to 4 trillion by 2030. I mean, I don't know about you guys. I think that's off, on the lower end of the range. And it's anyone's guess as to what that end all be all number is, or maybe it never ends, but what's sort of the next threshold. But suffice it to say, all that capital is going to want what? Yield. And on the other side of the marketplace of yield comes all of these sort of services, wrappers, products, and frankly, people who are going to leverage that capital to go out and build new things or finance the building of new things. And so that to me is kind of the quote unquote DeFi 2.0 moment, which is it's less about funding things that are inherent to crypto. And it's all about founders coming in and saying, look, I have an opportunity to basically enshrine yield on chain or leverage on chain capital to go get an unfair advantage as it relates to cost of capital or distribution in market X or market Y or market Z. And I think that's what makes this timing super fun, and why kind of the folks playing the legacy games of crypto are missing the forest for the trees and trying to do, the next, I don't know, perpstex, AMM, this or that. Like, I'm not saying that we won't entertain founders who have a really compelling pitch or thesis as to why something like that needs to be funded. We're very open-minded. And we do kind of barbell in terms of having our top-down thematic themes that we're interested in, but also being, frankly, humble enough to, when you get a compelling founder in front of you with a really interesting pitch and you're learning a lot, that's undeniable. And so I think, we generally operate kind of at the intersection or the barbell of those two things, where we have our ideas, we have our theses, we have our themes, but when you're looking talent in the face, that's undeniable as well.
When you're talking about distribution, I think something that a lot of people are interested in, especially when we hear the rumors that there might be like a Walmart coin or an Amazon coin. Do you see, I don't know if we could say 5 years out or 2 to 3 years out, like, are there going to be 10 stable coins that is 90% of the market? Are we going to have a lot of these other different stable coins, is kind of what you were saying, that like offer something else than the Circle Tether model? And like, where do you see is there going to be consolidation? Are we going to have every single bank will have their own individual stable coin? We're seeing like JP Morgan coins. So curious, like, what are your thoughts on the actual like issuance of the tokens and like where they're coming from? Or will large legacy fintechs use whatever the winner is at that time?
Yeah, well, I think, Genius has kind of set out who can and cannot issue these things, and, what's the right implementation for being able to roll your own versus needing to leverage a partner. And so I think that kind of cuts out a lot of like the earlier themes or prognostications of like, everyone's going to have a stable coin. Genius very clearly defined it such that, nope, that will not be the case. But look, we're at a kind of explosive time in the market where I'm not going to be surprised to see dozens, if not maybe hundreds of attempts. We'll see how serious these attempts are versus which one of those are maybe more POC like, or maybe more marketing or more saber rattling as it relates to getting, let's generate some shareholder value here and get on the next board meeting. Hoorah. I mean, look, I think it's going to be generally consolidation like we've always seen. Power law outcomes rule the day in these markets. And I think power law is just generally a function of obviously, network effects, but really just user preference, right? I mean, the two go hand in hand. I don't want to get on like the 16th stable, have to hit a bridge. Like, Matt, if I want to send you, $50 for sushi last night, like, it's just like, no, like there's a reason why Venmo and some of these just easy solutions win. They have network effects, they have distribution. And so, I think some people are also like, well, maybe there'll be an aggregator, or there'll just be like canonical swap between all these different things. We've been down this road, umpteen times in crypto. I don't know how many more times we need to fragment liquidity and standards and then kind of bring it all together in some kind of Uniswap-like function. Maybe things go that way. I'm not saying it's not possible, but as it relates to our underwriting and how we think about it, who's going to be the power law winner and why? And frankly, what are some of the kind of boxes that have yet to have been checked that someone could come in and check a few of those, and not only that, but generate a few more boxes that we haven't thought on our own? And how can we go out and diligence that and validate that, yeah, no, this seems like a viable path and thesis. And not only that, but the fallback plan is also a very large outcome. And not only that, the fallback plan to the fallback plan is awesome as well. So like, Yeah, I think, at the end of the day, it's like any sort of technology or standard. There's generally, 2 to 5 of these things. And we already have 2 sort of canonical. So I think a lot of folks are underwriting like, okay, maybe there's 1 to 2 more on kind of the stablecoin AUM sort of NIM model that we know to date. But look, I mean, we're already underwriting a bunch of things that are a bit more on kind of the yield. I guess we're calling them stablecoins or yield coins. I don't even know yet. But in any case, that's where we're at, and that's where the market is already, looking forward to.
Yeah, so I want to turn the conversation to DePIN, or maybe energy might be the better topic. So Framework has invested in Glow and Daylight and Star Power. It's made some investments in, I think, Uranium Digital as well, and recently USD.ai, which is kind of at the intersection of AI and stablecoins and DePIN, and maybe even energy. What's the thesis behind these investments? I think Framework's one of the only funds in crypto that really has this focus on what seems like energy DePIN or just energy relating to crypto.
Yeah. Pulling from sort of what I was saying earlier, we broadly see the market right now such that crypto and, the financial services to date, or DeFi, is frankly is ready to go out and compete at cost of capital and distribution on particular markets. And when you look at the energy dynamics writ large, these are generally pretty, I would say, localized, thorny, regulatory intensive, cost of capital intensive businesses. And so, to the extent that crypto can wedge itself in there and become a solution to any number of parameters, maybe I think cost of capital, let's not mistake ourselves here, is the largest value prop to many of these. But a lot of it is also distribution, and then also the auditability and the automation that a blockchain offers in terms of who's generating what at what location, in what sort of amount, at what sort of quality, where is that being distributed, who is using it. I mean, there are legacy kind of software core systems in the same way that there's like 2 to 3 kind of legacy stacks that operate banking cores on the back end. There's kind of like this old ossified software kind of database tech, from like the 80s or 90s, that's running a lot of this energy stuff. And suffice it to say, there's room for improvement. And so I would offer that there's kind of multiple components here. There's sort of the software services, the SaaS like opportunity in its own right. And sometimes that's the beachhead to establish yourself in. But very quickly, or if not, on par, if not even larger, just the capital and the financial services that are being offered by DeFi and on-chain capital are extremely compelling as well. And then when you bring those 2 together, all of a sudden you have this unfair advantage on distribution, especially in a post-Genius world. And make no mistake about it, what's also happened as of late under the latest admin is a whole wide variety of volatility and changes as it relates to maybe it's tax rebates or incentive programs or what have you. But, the financing landscape for energy, especially here in the US, has changed materially. Whether you're working on something decentralized or renewable, we don't have to get into sort of all of the politics and what have you. We need more energy. It's plain and simple. We're open-minded as to what the energy source is, such that the unit economics work out, such that you can get sort of the land, the power purchase agreement, the right stakeholders in place, and then the demand lined up to get to, a cost-effective unit economic perspective. But look, yeah, those are the main, I think, components that I would point out. And I think energy just for us was one of those aha light bulb moments where we were just meeting the right founders at the right time. We kind of had thematic ideas and maybe more macro sort of ideas. But when you meet that founder who's like, hey, look, I'm working with this stuff on the software side, but look, we can actually use stablecoins here. Or maybe others were going like, hey, look, they don't even know I'm using stables, but I'm offering more of like a private credit like sort of solution. Or maybe, we're doing something with the receivables or the auditability, or maybe we're putting sort of the carbon credits themselves into a unique wrapper that then enhances returns, and we can blend that out into a blended yield using on-chain, distribution rails. So I don't mean to throw the kitchen sink at you, but to suffice it to say, there are all sorts of rabbit holes and nuance around the intersection of energy and on-chain finance. Whether or not we call that DePIN, I don't really care what we call it. But if you're interested in those themes, I would love to chat with you, because we're certainly um, deep and have been deep, for a couple years now in that. And we look forward to, continuously meeting folks that are thinking about these things and building there.
Gotcha. So a very large design space, obviously. Would you say there's an opportunity for DePIN or on-chain financing to really help out with powering generative AI? So seeing very large build outs of data centers. I think we're seeing like trillions of in CapEx figures being thrown out by some of the larger AI companies. Do you see potential here for some of your investments or just crypto and DePIN and energy more broadly to come in and help solve this problem?
100%, Dylan. I mean, I'd argue we already have. You look at, frankly, the origin stories of NVIDIA or CoreWeave now, and all of the work that they're now doing and generating what's called the Neo Cloud. We don't have to necessarily get into that now, but let's just say the backbone of kind of the AI economy, and more specifically on the hardware and the data center side of things, all of those players, not all, but a large outsized proportion of them, began as what? I mean, where did they get their GPUs for, or their ASICs in the first place? They were all mining either Bitcoin or Ethereum prior to the proof of stake merge. And fortunately for them, they timed it well, such that, ChatGPT and the AI sort of boom had sort of kicked off, and they were just in the right place at the right time. And that's not to discredit them. Like, look, these guys are all killer operators and they did exceedingly well at winning this market. But, you go back in time and they were all sort of like, you would not have been able to underwrite NVIDIA years ago in the same way that you are today. You'd be underwriting video games and crypto mining as kind of their revenue drivers. CoreWeave, similarly, crypto mining as a business. I mean, the multiple on that is what? Minimal. Look at their multiple today. I mean, holy crap, right? So that multiple expansion as it relates to what is the opportunity between kind of crypto and AI, I mean, it's massive. And so, yeah, we've definitely made a few bets there. We'll continue to invest in founders. But again, I would say it's less about kind of general plays and more kind of like we can do kind of everything and like, trust me, bro, handshake. All right, let's go. No, like, who do you have in pipeline? Who's in your Rolodex? What is the particular use case that you're either servicing? Maybe you're doing software orchestration. Maybe you're building kind of the net new hypervisor, or maybe you are doing sort of a stablecoin like component that is more on the financing sort of side of things. Maybe you're helping with, depreciation or some form of a tax optimization strategy, for example. Perhaps you're financing, these larger capex intensive data center build outs by way of using stables, for example. And you don't own any of the hardware, but maybe you're just some form of a financial sort of middle layer there, if you will, or service layer. Like, these are just off the cuff ideas. Like, there are, dozens more that we've thought through and have been pitched on, and founders are, actively working there. But suffice it to say, the intersection of crypto and AI is rich. And I think a lot of people just look at what's been done to date, which is a lot of kind of narrative and a token that's theoretically AI aligned, and kind of discount it. But that would be a mistake. Crypto always does this. You put up, the easiest, laziest shot on goal first, let the tokens rip. Maybe a handful of people get lucky. Congrats. But, cohorts 2, 3, 4, 5 onwards, you're much more sophisticated, and you need to be, because your competition is, the market expectations are, and frankly, the demand side of thing is, they're much more educated and in tune with what it is that they need, versus going with someone who is kind of like, we're just doing a bunch of everything. And by the way, we have a token. That's not how the world works. So yeah, I'll pause there, Dylan. But I mean, a lot of people I think are spinning their wheels on like whether or not this intersection is real, whether or not, it's Fugazi. And I mean, from my perspective, it's like, not only is it real, it's been real for many years, and it's going to grow by orders of magnitude. It's massive. It's massive.
Yeah, let me ask you one sector where I think a lot of people are wondering, is it real, is it not? GPU compute startups, protocols, I think we've seen them continuously be funded, both in the DePIN space and the AI space. It seems like there's dozens, maybe nearing 100 plus of these at this point. Do you see a real opportunity here? And have you seen any evidence or indications of traction that make you think this is a space that could really get demand and work out?
Yeah, well, look, I think that generally the thesis of these sort of like Airbnb for GPU like startups is one in which, they're like, hey, look, the world's shifting from kind of these large training runs on centralized clusters to more of an inference intensive world. I agree with that. I think that's accurate. Then they go on to say that, hey, our sort of economies of scale or unit economics are such that past a certain threshold of adoption, we can basically beat the incumbents because cloud providers have massive margins, they command a premium, and I believe in that thesis. That's accurate. But I think the difficult thing about it right now is A, you're funding a hardware business. We're a crypto fund. I'm not super keen to get into semiconductor investing, which has blown out a lot of people over the last few decades. Godspeed. And, maybe we'll change our mind. But I think that what's difficult is, how are you going to get first looks or first access at the latest chips? You look at the utilization rates of any of these sort of Airbnb for GPU marketplaces. Everyone just wants the latest stuff. And that's sort of the zeitgeist right now. Maybe it shifts. Like I said, on a long enough time horizon, I do agree with the thesis that eventually hardware gets somewhat commoditized, or maybe inference requires just like you don't need the latest and greatest. Maybe I just need something that's like off the shelf. Maybe it's already in consumer hardware, for example. I believe in that. We'll eventually get to the edge. But look, we're not there yet. Look at, the hundreds of billions of dollars pouring into the sector. I don't want to compete with these guys, these centralized players who just have basically infinite money. They're now moving into debt. They're now moving into private credit. Like the wheel goes round and round. They're going to keep throwing up massive amounts of capital. And it's all about staying, tip of spear as it relates to the latest hardware design, coming out. And so, it's kind of GPU MEV that's taking place and more often than not. I don't want to get into that. Maybe we will. But I think there's such a large opportunity for everything that's either downstream of that or adjacent to that or is servicing those folks or helping them finance the acquisition of said GPUs. And so those are the angles that we look to play as it relates to what's something that's investable. Maybe this is just generally alpha writ large to the overall TAM and the TAM expansion and the multiple expansion, or maybe this is levered beta to the dynamics as they exist right now. And so that's how we think about it more or less. And like I said, our thinking could change literally tomorrow or next week or 6, 9, 12 months from now. But it's a fast moving market. I think it's a mistake to compete with the big boys and the incumbents when they just have infinite money to spend. And, there's kind of it's anyone's guess as to who's securing these chips first and at what sort of a premium.
I guess something interesting about when you're talking about competition is like, where do you see just DePIN in general is like when they're competing with these like legacy, wherever their sector is, Helium with mobile providers, a Hive Mapper with Google Maps, and like, where do you see this competition ending? Do you see these companies like the legacy companies kind of leaning into the decentralized nature of what these blockchain companies can provide, or do you see them actually just completely disrupting, and in 10 years every map website is using Hive Mapper data instead of Google Maps and it just completely disrupts them? I know that's either end of the spectrum, but interesting to where you guys kind of see this as like whether that's exit opportunities or where you see these like companies going in the future. Is are they going to disrupt them completely, or do you see kind of a merge with the legacy and what we're seeing today?
Yeah. No, great question. And this is always a fun one, right? Let's get philosophical here. I mean, more often than not, I sort of like to think of these things as becoming blends, or the legacy providers just reaching a certain point where it's like, look, we just have to work with this stuff, or our users are demanding it, our shareholders are demanding it. This is going to help us either, again, lower our current sort of OPEX or increase our unit economics. And I think that that's generally how I think about it. But again, it just like, it's so use case dependent and so business dependent. It's hard to kind of comment on any particulars. I'm not intricately involved with Helium and kind of like distributed telco, for example. So I don't want to sit here and pretend I'm an expert on that. But theoretically, let's just say Helium's like, hey, look, if you show up to the table of Verizon, a T-Mobile, or whomever, and you sit there and go, hey, look, do you want to, increase the LTV of your user base by 2x and reduce your OpEx by 5x? Like, how does that not work? Again, the devil's in the details as to how do you actually make that happen and how accurate is that? And, what's the reliability around that? What's the scale of that? And what's sort of the business model to strike in such a union? But, assuming that some of these networks protocols reach such a point, yeah, it's undeniable that the legacy providers will adopt them. And I think we also live in a world now where, a lot of these companies are smart. Everyone's kind of reading the same, founder biographies and historical precedents. And now we have AI at our fingertips. Unless you have like an egocentric sort of maniac or someone asleep at the wheel, I find it hard to believe some of these dinosaur sort of tech companies, quote unquote, are just going to fade into oblivion, like not even trying to do anything. I mean, look, a lot of these folks will be dealt kind of a fatal death blow. Some of this stuff will reach, garner traction, I think, a lot more faster than expected. Stablecoins, for example, is a great example of that. I already, chatted on that earlier. But I think the real kind of global power players, power broker incumbents, yeah, like they're not going to be unseated easily. I mean, look at the Googles, the Metas, et cetera. They're just dropping bombs like, hey, look, I'll hire you for $1 billion. Come join the team. There are multiple vectors, both technological, on distribution, on the social layer, as to how you can play these games. And, these modern day incumbents, they're smart. They know how to defend themselves. So, yeah, I see, frankly, the optimistic, use cases like, look, crypto is continuing to prove out its value proposition and its use cases. And not only that, we're like kind of leaving this primordial soup state of affairs where it's just generalizable and we throw buzzwords on it and nomenclature. And founders are coming in and going, look, no, this is tailored to your bespoke use case. And not only that, we will make sure it fits your particular business model wants and needs, and we will phase this with you. And I think we're basically at kind of like, I don't want to use this term like specifically, but in my mind right now, I'm thinking of like the start of B2B SaaS. And crypto, can do B2C at the same time in parallel. I think we can all agree we've already sort of been doing that, and that's sort of the crypto native. We can continue on that path. But, the B2B like SaaS moment or financial layer moment, or, just generally adoption across TradFi, across any number of instruments, that's all happening.
Awesome. I love that philosophical outlook. Kind of coming up on time, I wanted to ask, and not to put you on the spot, what do you think is your most contrarian take on crypto right now?
We're still early. Everyone's out calling 7th inning, 8th inning, 9th inning, DATs have us cooked, et cetera, et cetera. I'm telling you guys, we are still early. We have just reached a moment in time in which people are like just logging on to their first AOL account or even thinking about it. And look at all the value that was created in the internet and sort of legacy software to date. More often than not, it took place kind of a decade after, people got onto AOL. So, I don't like to use analogies like one-to-one. It's not apples to apples. But just in human terms, I think that's where we're at. And there's so much to be excited about. And I think that what's changed about crypto is, crypto Twitter is just wrong now. Crypto Twitter is almost the Jim Cramer of crypto, right? They've gotten nothing right this cycle. And that's good. It's, that's a sign of maturity. It shows how dynamic the market is. It shows just generally how many different opinions and sort of, products are sort of forming up and what they're going after. But yeah, look, I mean, I think that's a great thing.
And if crypto Twitter is wrong, what's the best way to build a thesis in crypto, gain a view of the market today?
I think concern yourself less with like all the crypto native terminology and sort of stuff that we've generated, and really just understand the market or the application or the user flow that said product or protocol or application is going after. Really dive deep. And so, expand your horizons. Don't just be listening to crypto podcasts or newsletters or what have you.
Except for this one.
But, we've chatted about, yeah, except for this one, of course, tell your friends. But look, I think it's just fun to expand your horizons now. We've kind of gotten to a critical mass such that, everyone talks about, oh, we're going to take over this or cannibalize that, or, convince them or persuade this market and everything's going to flow in and voila. Well, look, like I do believe in that. My time preference is probably longer than yours, but we're now at a point of execution and the devil's in the details, and you need to show up to the table prepared. And so, just put more plainly and more simply, go out and learn, go educate yourself. If you find something that you're very excited by or, curious about, just keep pulling on the thread. And I mean, with LLMs and AI now, I mean, it makes it even more fun. Now you have a brainstorming partner built into your pocket. So I'd say go have fun, follow your natural curiosity, ask questions, and really index to finding the right people. Nothing will change in this world as it relates to, AI or AGI or what have you. You need to be around the right people and chatting with the right people, and have humility. Ask questions. Do not shy away from asking the dumb questions. Overcome your imposter syndrome, et cetera, et cetera. Just be, I think, genuine, kind, curious, humble person, and you'd be surprised how far that will get you.
Awesome. Is there any last question that you would want us to ask you?
No, I think we have covered a lot of ground, and yeah, it's been nice chatting with you guys.
Okay, awesome. Where can listeners go to hear more from you or learn more about Framework?
Absolutely. Well, we're all online, so you can find, all of us on Twitter, our website, framework.ventures. My handle is B_POTS23. Yeah, just Google search or ask your, nearest LLM, you'll find us.
Awesome. Thanks so much for coming on.
Awesome. Thanks, guys. Have a good
Thank
one.
you.